Hey everybody, welcome to Mortgage Today for Thursday, January 25th, 2024. And oh, what a day it was. UMBS were up 2 basis points bright and early this morning right off the bat. Bonds were modestly stronger overnight, but could just as easily been referred to as flat. You'd be forgiven if you would have expected the morning data to result in some weakness. But alas, UMBS were only up 1 tick, but that would change with liquidity as the day went on. If we feel compelled to reconcile the paradoxical reaction, the best bet is likely to realize that the GDP headline is only one of the morning headlines. We had to dig a little bit deeper. But in terms of headlines, we got jobless claims, which came in at 214,000 on a 200 estimate, so it came in higher for once. It was 189,000 previously, which is a big jump, which supports that it is starting to hit jobs and could help support the cause for lowering rates. Durable goods also came in at flat at 0.0 versus a 1.1 estimate, which also supports that claim. It was 5.5 previously, which is quite a big drop. However, the fourth quarter GDP came in at 3.3% on a 2.0 forecast, and the GDP deflator came in at 1.5 versus 2.3 forecast. So fourth quarter GDP rose 3.3% at an annual rate in the fourth quarter of 2023, which is way above the street estimate of 2%. For the full year, GDP was up 2.5%. Increased consumption was the big driver, as consumers spent on healthcare, pharmaceuticals, and recreational goods. The increased spending came at the expense of savings, which fell from 4.2 to 4% in the fourth quarter. Importantly, the PCE Price Index component of it rose 1.9% in the fourth quarter compared to 2.9% in the third quarter. Excluding food and energy, the PCE Price Index rose 2%, the same as the third quarter. We will get the December PCE numbers officially tomorrow. However, the fourth quarter numbers look to be right at the Fed's target, which gives the FOMC leeway to bring down rates. However, the fourth quarter GDP coming in higher than expected at a strong number of 3.3 on an annualized rate indicates we are not near a recession, which is the primary reason why they would bring down rates. So we are nowhere near that. The new home sales rose by 4.4% month over month and 8% year over year to a seasonally adjusted annual rate of 664,000. So pretty good increase. However, December existing home sales slid to a seasonally adjusted annualized rate of 3.87 million, the lowest level since August of 2010, and the end of the second round of ill-fated congressionally enacted first-time home buyer incentives. Excluding that, December of 2023 was the worst month since late 2008, which was a rough time. And 2023 sales were 4.09, which is the lowest since 1995, down from 5.3 million in 2022 and 6.1 million in 2021. However, this is likely the sales trough. While many are not huge fans of using the GDP report as a consistent market mover for bonds, if you're going to use one, it would be the advanced one, which is the first of 3 releases. Today's was quite a bit higher than the median forecast. If the market were truly interested in reacting to the economic implications of this number, we would have seen yields move higher, but instead bonds rally. While there were components in the report that were bond friendly, as well as other economic reports that were more downbeat, traders were at least as interested in the spillover effect of European trading that showed a more dovish announcement than expected out of the ECB. So UMBS ended the day up 30 basis points at 101.09, which puts us right in this very narrow range. It puts us above the Fibonacci line at 101, which has been a pretty strong floor, and it's supported by the 50-day moving average. However, we have a pretty strong ceiling at this 101.39 Fibonacci, which has been a pretty good pivot point right at these 2 Fibonaccis, as well as the 25-day moving average. It'd be nice to break back up into that range so we can get some run up on price improvement. However, check out the post from our sponsor at wellthatmakesense.com, which is from Traction from Gino Wickman. If you are driven to achieve your goals and find lasting success, the entrepreneurial operating system is what you need. This is a proven framework for gaining clarity and focus. And check it out at www.wellthatmakesense.com.